watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Drikus Combrinck from Capicraft and Bright Khumalo from Vestact. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. It is D-Day, Liberation Day, Trump calls it, and already I can see that there is a little bit of panic, especially through our local currency. I think yesterday it was at around 18 Rand 30 something against the US dollar. Of course, we had gotten used to it around 18 Rand 10 cents, 18 Rand 20 cents against the US dollar. Now it is at 18 Rand 65 as we are pre-recording this episode. Bright, I actually thought that all the bad news would be in the prices, but seeming that not. Are we just waiting? I don't know. What are we waiting for at this point?
Look, we are not dealing with rational markets and rational players, quote unquote, that we are used to in open public markets. We're dealing here with a very interesting character who can change his mind at any time, which is also a great thing, by the way. It keeps the market interesting and gives us opportunity, obviously, to get into good names that we wouldn't have found an opportunity to get in without these pullbacks. Some names come into mind, but we don't want to speak about that. We want to speak about that as the show goes on. But this is why we do this business of investing as long-term investors in markets, because such events create a lot of opportunities. But in terms of speculation of what could happen in D-Day, I mean, there's talks of reciprocal tariffs. There's talks of even if you have a plant in the United States, you're still going to get hit with tariffs, which is not how actually tariffs work. So there's a lot of confusion of what's to happen. And obviously only Liberation Day and the official announcement in the Rose Garden of the White House is going to settle that. So you have to wait for that. Whatever happens before is all speculation, in my opinion. Yeah,
and we're still waiting for them to wake up. So hopefully we can get more clarity as the US wakes up and joins the party. Drikus, at this point, is there anything that you are worried about? Because also it's quite interesting because, I mean, we're seeing the weakness in the Rand, but also so many reports coming out and saying that things are looking bearish for the dollar. At this point, does it seem like initially it will be a lose-lose situation for everybody? How are you looking at this?
Well, I think a lot of it has already been priced in. We've had wheat markets the last few weeks. If you look at the VIX, it's near 20. That means that people are paying up already for some protection. And I'm sure there's a lot of shorts out there. Not enough if things go further south. I'm not too scared about the tariffs that's going to be announced today. I think the market is quite covered for that. It might surprise to the downside, obviously. But I think the general trajectory at the moment, with regards to liquidity, with regards to growth in the US that might be rolling over, there's a lot of uncertainty that tariffs and other policies, are creating. So I liken it to, Trump is busy sorting out a lot of, let's call it, rotten apples. He's trying to get rid of a lot of rotten apples, and he's doing that by shaking the apple cart. But if he shakes too much, the apple cart tips over, and I think there's a danger of that. And so somewhere in the not too distant future, you might see a proper sell-off. I'm cognizant of that risk, and we are positioned appropriately for that, and I think so should the viewers be.
Talking about positioning, Bright, you spoke about some opportunities that you are seeing in the markets. I do know that you have quite significant exposure to the US markets. Now, we have seen those under a lot of pressure. Are you panicking, or are you finding opportunity in that bearishness in the US?
Look, if we look at the S&P 500, where it was in February at its all-time highs, and today on D-Day, on Liberation Day, we're only down 8%. So if you're calling it panic at 8%, maybe you're reading too much what journalists who don't participate in markets right. So you need to be careful of what you read and consume, and just focus on specific companies that you find, are good quality companies. Look at them and look at how far they've fallen from their highs, and see if maybe it's a good opportunity, to enter into those names. Because I don't know, man, we're seeing the S&P 500's, forward PE has gone, down about 4 to 5 points. It sounds like free money if you're a long-term investor. So, and that's even more enhanced, and highlighted if you go to specific names. You go to, I don't know, a company that was selling at a PE of 100. Today it's selling at a PE of 44, but it's still growing at 68%. Sounds like a bargain.
Okay, interesting.
Yeah.
Well, I mean, looking at the fact that there could be bargains in the US markets, but quite interestingly, the JSE has actually gone against the grain and actually performed pretty well over the last few weeks, while the S&P 500 and the Nasdaq have been battered. And I'm wondering if maybe, Drikus, this could also be an opportunity to look inward into the JSE for opportunities. Drikus?
Yeah, so the JSE.
Oh, I think you are mute.
Those multinational companies.
You're back.
Hello?
You're back?
Yeah, so the JSE has done well just because of a few multinational companies. Emerging markets and European markets have done well the last few weeks as capital has flowed back. Those multinational companies are Richemont, British American Tobacco, AB InBev, and obviously Naspers and so. So the multinationals have done well. That has buoyed up our market. But outside of those and outside of the gold counters, it's liquidity is drying up very fast. The risks around the GNU, etc., and EWC and whatever other political risk you can conjure up locally has definitely reversed what we've seen last year to a big extent. And if you look lower down, outside of the top 40 at SA counters, mid caps and small caps, there's very little liquidity at the moment on the buy side.
Yeah. It's quite interesting as well that you talk about that, because we are still awaiting for an agreement or a deal to be reached between the ANC and the DA, seeming that the DA is sticking to its guns. Let's take a look at some of the questions that have come through. The viewers here is asking about your preference, in terms of the industrial sector. For me, this is interesting, Bright, because when you talk about an industrial company, I think of companies that are involved in manufacturing and the like. But I also know that, for example, in the industrial 25, you have counters like Richemont and Naspers. What's the distinction here?
I don't know. It's an outdated index. So that should be your next question to Leila Fourie when she comes to Business Day TV to explain to us what's going on there. Because one is a technology company,
yes,
the other one is an industrial company. I sort of understand that because they manufacture goods. So I think you've basically made, if you're looking at that, industrial 25, and you look at where the capital is flowing, which is what Drikus has already discussed, those are the only names that you could potentially put capital in because they're investable, they're diversified. Most of the earnings are diversified in many different currencies, not just in the South African rand. So you have a nice hedge from that South African rand. And I did make an example earlier on before we went on air to say I miss those days of, SAB. You could just say, that's my top pick. But I can't really go with AB InBev currently because, as Drikus mentioned again, that we're seeing receding volumes in terms of beer consumption. I think that has a lot to do with economies not actually, firing on all cylinders in the West and obviously in developing economies. And another thing in trends, in terms of beer trends, we're seeing more specialist beer drinkers, or manufacturers, especially in the United States. Those are the ones that are doing well instead of, craft beers. And here in South Africa, obviously, that's also a growing market locally. But when you look at, Europe, where people are still staunch beer drinkers, when you look at population dynamics, that's not exactly where people are giving more birth, and more and more people drink more beer. And as an absolute number of beer drinkers, Europe is only a small portion. Even if they could grow that market by 100, 200%, it wouldn't make any difference to say if Africa had to drink more beer and South America had to drink more beer, because that's where, most of the growth in population dynamics comes from. So unfortunately, even that is not looking great.
That's interesting. Actually, just drilling into AB and Bev, is that company basically classified, Drikus, as ex-growth?
Yeah, I think if you look at the volumes the last few years in the beverage market, it's to a large degree, you can classify it as ex-growth. It's priced as ex-growth to a large degree, or at least very low growth. I think ex-growth will be something priced like British American Tobacco, that's ex-growth, or declining growth even. Or even the likes of some of the telecommunication providers, the multi-choice is basically ex-growth, or priced at least as ex-growth market. But AB InBev a little bit more expensive. I think what you will see is continued margin growth in spite of volumes being quite stagnant or lowish volume growth. You would see premiumization still ongoing, and they will try to expand into adjacent markets, not geographically, product-wise, adjacent markets. So I do think there will be growth, but it's not the heydays here. It's not going to see double-figure EPS growth for a long time. And, the world is kind of geopolitically splitting up. We don't know how far this is going to go, but supply chains are being redrawn. Real lines on maps are going to be redrawn somewhere in the near future. And, multinational companies' margins will be affected by that. So that's the side on the risk. So I'm very neutral on AB InBev at the moment. If you've only got an SA portfolio, it makes sense to put it in. It's quite a rand edge. It's a solid company still. But I prefer to buy industrials offshore, actually. SA, as its competitiveness is declining, with regard to manufacturing, etc. And it's just better to find these companies offshore.
Bright, you wanted to say something?
Yeah, I think if British American Tobacco and other, sort of like Philip Morris, North American tobacco companies were able to pivot into smokeless, I think it's possible that something like an AB InBev could pivot into 0% that people actually like, that tastes better.
Yeah.
And most importantly, the biggest growth coming out of the beverages industry is probiotics. Give me a probiotic drink with, I don't know, a crazy flavor like
kombucha.
Marijuana. I don't know. I'm just saying, like a kombucha beer. Maybe that's the next big thing. Maybe that's where the development team should be looking at.
Yeah.
I'm just throwing ideas out there, but probiotic, that's where the park is going, and that's where big companies should be focusing. Big beverages companies should be focusing. Coca-Cola is putting all their energies into that.
Yeah.
We've seen a lot of acquisitions recently, so maybe AB InBev should be looking at an alcohol drink that also gives you probiotic. I'll drink that till I go broke.
I am going to ask the SAB CEO next time I speak to him on this. Thank you for that idea. We were talking about industrials, and actually a specific question from the viewer is, and let's actually just talk about the, industrials that actually make goods. I would like to have one industrial stock in my portfolio between Argent and Invicta, which would be a preferred buy with a better outlook for a few years. Drikus, of course, we know that for these countries to really thrive, there needs to be significant economic growth. So Argent, Invicta at this point, would those be on your radar?
Yeah, we've done quite a bit of work on Argent. It's come down quite a bit in the last few months. I think this makes it interesting. There's a lot of cash on the balance sheet, almost double the current market cap. I think management is going to waste some of that, but there is a good chance that some of that gets its way back to shareholders in the form of a special dividend, share buybacks, or maybe an unbundling of the Australian division, split in the company between the local Moormans and the Australian Pacific business. There's something should happen there. I think it's an asset play or deep value play, and it's not a quality company. It's a shadow of its former self, but I think there's a lot of upside here.
Yeah. Bright, you did also mention this economic growth factor. Is the industrial sector still strained, or is it looking to have a good run like the resources currently? Is it a good time to enter it now? We know in South Africa that we are forecast to grow the economy triple what we produced last year. Of course, that remains to be seen. But also some of these industrial counters to hedge their risk have gone offshore. So I don't know, would there be an opportunity in that industrial sector?
I don't know. Maybe in a great scenario where South Africa does the turnaround, similar to what China is trying to do, to focus on the economic environment, making it easy for companies to operate, less red tape, and obviously pumping a lot of money into the economy. We don't even have that money to pump into the economy. That's the first problem. And we see our GDP growing, say, between 7 and 10%. Yes, I'd be interested to look at companies that focus on local infrastructure, industrial companies, banks, local banks, etc. But currently, that's not where we are. Maybe we should be taking a page from these industrial companies that are diversifying offshore and take what we would have invested in them and diversify offshore, maybe in those industrial companies in economies that are growing at a much higher clip, than the average economy in the world. And, just go where the opportunities are. I mean, that's what prudent and wise, capital allocation should work. You should go where there's opportunities, not here because that's all you know. You should be looking into investing where you're going to get the best value for your bucks long term. I'm not saying it's not possible in South Africa, but I'm saying read the room. If management is putting, all their returns from South Africa and all these operations that have sort of plateaued, and they're looking for opportunities elsewhere, maybe that's what you should be doing with your own capital when you're allocating. If you're allocating 20%, 30% of your investable amounts or your capital per year locally, maybe you should looking at doubling that, allocating more offshore, because that's what everyone is indicating, where the opportunities are.
Well, that's what Drikus is doing. Just a page out of your handbook there, Drikus, on those industrials that are on your radar offshore.
Yeah, there's a lot of industrials offshore that we like. One of the industrials is a company called Valaris. Valaris is an offshore driller. They own offshore drilling ships, and it's trading at a fraction of book value, or a fraction of even a smaller fraction of replacement value. That's completely de-geared. It came out of bankruptcy just a few years ago. So it's a de-geared balance sheet, basically. It's run very, very conservatively. And there is only basically 3 drill ship operators or owners out there. And they're one of the few remaining ones. And the drill ship global fleet has gotten very small. At current oil prices, it's not economic to drill holes in the Permian Basin or most of the other basins as well. There isn't many other non-OPEC countries that can produce more. Canada comes to mind a bit. They've got the oil sands there, but they've got no way to get it out. That the Green Party there and the Liberals do not want to build pipelines to export the stuff, and so that's
Oh, Drikus, I think you are. Oh, there we go. You're back. You're back.
Okay, so where are the volumes going to come from the decline rate? Remember, there's a global decline rate for oil. So where are the volumes going to come from? It's going to come from offshore, and offshore drillers within a smaller fleet are set to make a lot of money going forward if that scenario plays out, and I do think it will.
Well, quite an interesting thing that Tesla, we are due to get an update from Tesla on D-Day, and we know how under pressure that stock has been also over the last few weeks. I don't know if that's set to come out this afternoon or evening, but Bright, it seems that there are low expectations for the delivery numbers that Tesla is due to come out with. What's your reading of that stock and the environment at this point?
Look, if the founder is the main reason for the product that the company is trying to sell not selling well, it serves them right, I think, that there's backlash that's happening. Because when you're a business individual, at the end of the day, you're solving for a problem, right? But if you move away from the focus and the mission of the company and you get sidetracked with racist comments, doing things that you're not supposed to do as a figurehead of a massive market cap company, not just a listed and other unlisted 2, 3, 4, 5 companies. I think it serves you right that the market votes with their wallets, and Europe currently is voting very hard, where the expectations of the delivery of this quarter's Teslas. I mean, the production was amazing, but if deliveries are down 46% in the UK, Germany, which are some of the main markets, and obviously Scandinavian countries, I think the individuals that bought those EVs are saying, get out of here, we don't want you here because you are a can't even say the word, separatist individual, and you're not focusing on actually solving the problem you promised in your mission statement in your company. We don't want to be part of that. And I commend every individual company that actually has gone out and said we're not going to buy any Tesla's fleet for our companies or for rental, etc., and voted with their wallets. Serves them right. I mean, we still have some clients who own the shares, but most clients that have asked to get out of the stock, we've agreed to get them out. It makes absolutely no sense to stay and support an individual like that.
Well,
even if the individual is me in the future, vote exactly the same.
We will see what the numbers look like later on, but thank you so much.
They're not going to look good. I'm telling you in advance. And all the forecasts that have come and the actual delivery numbers are, they double-digit drops. Not good if it's self-inflicted. If it was economically challenged, it would make sense, but it's not.
Well, let's talk about what looks good in your eyes right now. Your stock picks. Drikus, what are you choosing?
Reinet, locally listed and is listed in Amsterdam as well. Recently sold British American Tobacco. They've got about 1.5 billion euros in cash on the balance sheet at the moment. That's a large chunk of the balance sheet. Also put a lot of pension assets. It's already trading at about a 40% discount. If you take away the cash, so you're only looking at what you're actually paying for the assets, you get about a 55% discount. That's a lot of upside, even if it just trades to a 20 or 30% discount from here. I think they're going to buy back shares, or they already are at the moment. That creates more value, or there will be some special dividend or some kind of asset purchase going along the way. Even if they don't, we're definitely in a difficult economic environment. I do think that 1.5 billion in cash provides you with a lot of optionality. So I like the counter. I think it's an asset play. I think something's going to happen. Mr. Rupert is trying to unlock value in his other investment vehicles as well, like Remgro. They did it with RMH, where they were indirect shareholder, basically. So I do think there's some kind of value unlock coming for shareholders, and it's trading at a very deep discount to the real portfolio.
All right. Bright, where are you finding value today?
I'm looking at AppLovin currently. So this is basically a company that benefits from network effects of app developers coming together into their platform. This company obviously provides the platform, the software to develop these apps, and obviously the marketing and making sure that all these apps that are developed by this richness of skills and resources happen. So if you actually on any app store, chances are, 60 to 70% of the time, the app you're looking for comes from, this AppLovin.
Okay.
I want to call, the sandbox, AppLovin sandbox.
Okay.
So it's a great company, US listed. It's almost about $100 billion market cap, currently down about, I want to say just over 50%, so call it 51, 52% from their highs of February. So giving us an opportunity for growth here. I mean, I don't foresee individuals, stopping using their favorite apps, especially people in, fitness and people who are addicted to their fitness apps, etc. And one of the biggest announcements in the past 2 weeks is that Garmin is going to stop for example, individuals from using their apps for free. They're also coming into the market and saying, you know what, we think you should subscribe for X amount per month or X amount per year. So more and more apps are heading that direction, meaning that app developers are going to be able to have power to monetize their apps using similar business models. So I'm loving this company at these lower share prices. It still isn't super cheap, but it's really cheap as compared to where it was 2 months ago. So I like AppLovin right now.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Drikus Combrinck from Capicraft and Bright Khumalo from Vestact. Up next, the close. Stay watching.